Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. As of today, we are in correction territory. That means that the stock market is down 10% or more, and we still got some problems that we have to deal with. So in today's video, I'm going to give you a few tips and a few areas of the stock market that aren't terrible, and a few companies and tactics that you can use to adjust your portfolio to really reduce some of those losses. And in some cases, you might even find a diamond in the rough and maybe make a little bit of money. Now, this is the perfect time to do this because we are in March, and while I generally will adjust my portfolio in June, which is twice a year, every 6 months, it does make sense to make quarterly adjustments to your portfolio. As a former advisor, this is what we do. We come in, we talk to our clients at least 4 times a year, and for those who want to be more hands-off, we meet with them at least 2 times a year. So right now, in March, this is the time to go out and say, look, the hypothesis going into 2022 was that inflation and interest rates were going to hamper the market. Therefore, financials made sense, healthcare made sense, and other defensive stocks made sense. And some of that is still quite true. But now that we are, 60 some odd days into the year, we got this Russia-Ukraine conflict, and things have definitely changed. And remember, whatever you set in stone, whatever that hypothesis is at the beginning of the year, does not hold through the entire year. So it's time to make some adjustments. We're going to talk about a few of those adjustments. Now, what happened and what is happening right now is with this Russia and Ukraine conflict, a lot of the market has overreacted. Tech has sold off more than what we expected in places that it probably shouldn't. But also, the cost of oil has really thrown off the market, and that's why we see a lot of energy and oil stocks doing quite well. Now, the key here is that, and we've talked about this probably about November or so, November and December, that energy companies were poised to do quite well, or at least better than what they had been doing, let's say, the last 5 years or so. That's because energy costs were going up, inflation was going up, and people were going back outside and using more energy. That was relatively expected. But we didn't see it like this. So I'm going to give you about 4 areas to look into. I'll just rattle off some names that you want to inspect, and then tell you, give you kind of some comparisons to look into. And these should help improve a little bit of your performance and give you a place to protect yourself. Now, the other thing that you want to know too is, yes, the market's down. No, it's painful. You might be thinking, is this the best time for me to invest? Should I start investing now? My answer is still yes. It always depends on what you invest in. Some of these names you may want to consider. You definitely want to consider some of these areas to invest in, if nothing else. So yes, depends on what you invest in. 2, if you are holding technology stocks like a Microsoft, it's down, I think, double digits this year, which is not great. I'm still holding. Someone had asked me earlier today, I own shares of Amazon. They said, well, Amazon's not doing well. What are you going to do with it? We'll see come, June of this year, whether I'm going to continue holding Amazon or not. But right now, it ain't looking good. And it's not just because of right now in 2022. Amazon was down last year. Okay, so if I were to get rid of Amazon, it's really because of the last 18 months, not the last year or 5 years or what have you. So we'll see. We will definitely see what happens with Amazon in my own personal portfolio. But again, remember, we're looking at this, or you should be looking at this if you're an investor for the long term. There are companies that aren't doing well that I may continue to hold, and you may want to consider continuing holding. If it's a Microsoft, a legacy name, a company that we know has done well for a while, you probably want to hold that. Something like Apple, I think it's down 6% this year. Let me double check that and put it here on my chart. And see. So like an Apple, I'm not letting go of Apple. However, Apple is down 10% year to date. So that's not great, right? But it's Apple. I'm not letting go of Apple. This is a bit of an overreaction. So this does not mean, and this video is not sell off everything and go buy this. It's see what you have, make some minor adjustments, and see if there are any areas of the market that you want to add to your portfolio, and in some cases replace. If you've got, I don't know, Unity software or something like that, a company that was real high growth last year and not so much this year, a Zoom, a Peloton, something like that, and you want to get out of that and go into something that's on this list, then that makes a lot of sense. All right, so no more explaining. Let's go ahead and get into it. I'll start off with the 4 areas and just rattle off some names, and then we'll go from here. All right, so the 4 areas, and some of these are the same from earlier, but the 4 areas that you really want to look into is insurance. That is a cash heavy business, and they're doing pretty decently because whether it's life insurance, stuff like that, you got to have it, and regardless of what's going on, those prices are staying the same. The insurance companies are doing quite well, and if you're talking about auto insurance, you gotta have it. It is required. So that's a good business to be in. So we got insurance companies, we've got defensive stocks. We've talked about defensive stocks before. They pay good dividends usually. I'll give you a few new names that we have not necessarily discussed. Healthcare, I've talked about healthcare before, but if you are looking at a heat map that we had talked about the other day, you'll see that healthcare is one of the few green spots for the year. And then if you're interested, you have energy out there, something like ExxonMobil and Chevron. I don't know how I feel about it. For one, the Russian-Ukraine conflict, that's really the biggest reason why energy is up so much. Energy was also up last year, but energy is like a boom and bust cycle. However, the most money is in that space right now. So I'll go over all of these. All right, so let's go ahead. I'm just going to name a few companies out. So in the energy space, I mentioned 2 of the big ones, are not the only one. Nextera Energy, ticker symbol NEE, is another place. ExxonMobil is a common one, XOM, and then Chevron CVX is another company there. Personally, I'm probably not going to go for energy just because, again, I'm not really keen on the whole Russian-Ukraine thing pushing up the price of oil. That's just me. But that is the hottest, best place in the market to make money right now. That is out there. Where I'm more focused is, my focus is in these next 3 areas. Healthcare. Now, yes, I've talked about United Healthcare. I've talked about Danaher, DHR, which I still hold and plan on continuing holding. That's not going to go anywhere for me. And it might be on my public portfolio. It might be my most profitable stock outside of Apple and Google. It's definitely up there because I've held on to it since, I guess, the pandemic started. All right, so outside of those, you have AbbVie, ticker symbol ABBV. That company is up about 10% this year. Remember, the market is down 11, almost 12%. AbbVie is up 10. Okay, keep that in mind. That's quite good based on where we are in the market right now. So ticker symbol ABBV. Bristol Myers Squibb, BMY, they are up. Actually, I don't have it here, but they are up. That's a company you want to take a look at. And then CVS. I've talked about CVS before. They're doing pretty well. The reason why I'm not going to go over the performance of each one of these is because there are a lot. I have at least 2 or 3 in each category, and that's 12 different lines I have to look at and repeat out to you. But AbbVie, in and of itself, that one's up 10%. So you have AbbVie, you've got Bristol Myers Squibb, and you've got CVS. Those are the 3 healthcare companies. In addition to Danaher, if you want to look at that. In addition to United Healthcare, if you want to look into that as well. But we did videos on that not too long ago. In the defensive category, there are several here, some of which we've talked about. I'm a fan of Costco. I've talked about Costco before, but keep your eye on these 4. You've got Kraft Heinz, KHC, and let's see if I have that one. I don't have that one on my chart, but I got another one that is very delicious. That is Hershey. Hershey's ticker symbol is HSY. Many of us don't think that Hershey's, yes, the candy company, is public. It is. They are up about 10% as well as AbbVie. They're right next to each other in terms of performance. The reason why is, in stressful times like this, ice cream, chocolate bars is kind of what you gravitate to, at least for me. Maybe I'm just talking about myself. But it is doing quite well. Kroger is doing really, really good. And, I had some money in Kroger, made a little bit of money. I talked about it, right? We mentioned it briefly when I talked about Costco. I said, hey, I'm in a trade for Kroger. I actually tweeted that out. When I talked about ticker symbol SBNY, Signature Bank, and Kroger. I tweeted about that. Last week? So check your boy out on Twitter. When I do short-term trades, I do be telling y'all. Now, I wish I had held it a bit longer because it's doing even better now than what it was then. But I got my money. I ain't mad at it. Kroger is out there. They do pay a dividend as well. Most of these do in this space. And then Coca-Cola. I brought this up on Public not too long ago. Some people were like, yeah, you're right. That stock is good right now. And others were like, well, I don't want to chase Warren Buffett. You don't want to see, or you don't want to be interested in what some of the world's richest investors are doing? I do. Look, you might, if you've been investing for 90 years, you might know something. So Coca-Cola is one of Warren Buffett's oldest and longest holdings, and it is doing well right now. And in a defensive stock environment where these stocks are where people are going to focus their money, Coca-Cola is hard to beat. Okay, same thing with Hershey, same thing with especially a Kroger. You may want to add a Costco in there as well, and definitely a Kraft Heinz. These are where people tend to go, and I think Kraft Heinz KHC is also a big stock in Warren Buffett's portfolio, if I remember correctly. But again, these companies make money. Usually they're in a space that you have to have anyway. If you're going to a Kroger, you're probably buying some Coke product while you are there anyway, whether it's Dasani, I don't know who drinks that, but Dasani, Sprite, and all the other stuff, Powerade, I think they make, all the other stuff that they make. It makes sense. Like on paper and in real life, based on what we're seeing right now, it definitely makes sense. So those are the ones in the defensive category, the defensive sector that you do want to pay attention to. And then lastly is insurance. If I'm looking in the insurance space, Travelers Insurance as well as Allstate. Travelers is TRV, and then you have Allstate at ALL, which is all. Travelers a little more attractive to me. Travelers is up about 8.5% on the year so far, which again is a lot better than being down almost 12%, which is where the stock market is as of the recording of this video. So again, I'll recap some of these. Again, I don't want to do them all because I'm looking at 8, 9, 10, like 12 companies. That's a lot. But I'll just kind of recap some of these. So if you want to go for energy, ExxonMobil and Chevron is where you want to be. Speaking of returns, ExxonMobil as of today is up 42%. Again, energy, we're coming up on what could be an oil crisis, or at least a shock, because supply and demand is really thrown off because we're considering sanctions on Russia's oil. They're the second largest producer in oil, which is one reason why the price of gas is going up. That makes a lot of sense. So a lot of these energy companies, gas producers, natural gas producers, all that kind of stuff, a lot of those are up. So that obviously makes sense. Okay, so ExxonMobil is one. That one is up 42%. We've got both Travelers. We had Travelers up about 8.5. Allstate you want to check out as well. Then you got Hershey up 10%, as well as AbbVie. Hershey is HSY. AbbVie is 88. ABBV, both of those are up 10%. Other things on the list that I don't have percentages for, Coca-Cola, Kroger is doing quite well, Bristol Myers Squibb, BMY, and then CVS. CVS is CVS. We talked about CVS before. So those are the ones that I would definitely keep my eyes on, especially healthcare, defensive, and insurance. It doesn't have to be these. These are just some of the quick ones that I picked up. I'll be digging more into these. Perhaps if y'all want, y'all know how to get videos out of me. You just comment in the comments below. Maybe we can do a top 5 insurance, top 5 defensive, top 5 healthcare. Maybe we can do something like that. But these are the places that you do want to look for times like this. Now, thankfully, right, if you have been a part of the channel, you've been subscribing, which you should be subscribed if you're not already, you have some of these, at least in these areas. We talked about CVS before. We've talked a lot about defensive stocks for a long time now, right? I've mentioned, if I'm not mistaken, we did a whole healthcare video. Did we not? I'm pretty sure we did. We talked about CVS. We talked about Bristol Myers Squibb, if I'm not mistaken, and a bevy of other healthcare companies, including a healthcare ETF. So those who subscribe and those who are on the email list and hit the notification bell, all kind of stuff, you're usually going to be in the right places more often than not. And that is exactly what's going on. And you want to take times like this after a quarter, which I know technically we got 3 more weeks left into the quarter, but after a quarter, it's you can start to see what's going on. You can start to make those little tweaks, and these are some of the tweaks you may want to consider making, consider adding to your watch list, and doing a bit more research. The last thing that you want to pay attention to is next week. I think it's the 15th, March 15th or 16th. At some point next week, the Federal Reserve is going to pile on. I call it piling on, but they're going to announce, or they're going to start meeting about what they're going to do with interest rates. The market is going to be skittish because they're going to harp on, will rates be what they expect it to be? Will it be lower than what they expect it to be? Will they not raise rates at all? Now, most analysts, myself included, well, I'm not an analyst, but most analysts and me, comma, and myself, I think that they are going to raise rates 0.25%. That's everything I've been reading says that's where they're going to go. The market is going to be watching that. It can go one of two ways. One, depending on what's going on in Russia, it could, signal things are worse, right? Inflation is up, war is up, unfortunately, bad things are happening, and you're raising rates. Market could tank even further. That can happen. Okay, so psychologically be ready for that. The other thing could be, the market says, oh, we were right, they are going to raise rates 0.25%, which is less than what they were going to do before, and markets rise. That could be true, and the market could rise. I don't think that's going to be a permanent thing. As long as this conflict in Russia-Ukraine is going to dominate the market, and as long as gas prices continue to rise, that's going to be the biggest problem in the minds of consumers and investors. It is going to continue to be rough. However, if you're investing in one of the four categories, one or more of the categories that we talked about, you might be able to offset some of the turbulence, because a lot of these pay dividends. That helps your portfolio growth, because if you're down 11 but you get a little bit of dividends, you might balance some of that out. And then again, a lot of these companies have done well, so you may not see the same type of burden, you may not see the same type of pain that everybody else is seeing in their portfolio, because you are well diversified, because you got healthcare, because you got defensive companies and things like that. This is the time to make those adjustments. All right, so that is almost done with my spiel. The last thing I'll say is you do want to check out the Investors Toolkit, because we do monthly calls about what's going on in the market right then and there. Okay, that's just one of the things we talk about, including how to sort through and find investments that work based on what's going on in the market. If you're looking at trading and making money when the market goes down, which you can do with what is called put options, we talk about that in the course too. Markets move and change all the time, and it makes it very hard for a new investor to figure out where to start investing. The Investors Toolkit makes that a very simple process where I handhold you and take you through everything step by step by step, so it is no longer confusing, so you can invest with confidence and you're not ever really confused about what to do with your investments, and you can walk through with the process. So if you want to check that out, I'll make sure that there's a link in the bio. I'll also include a discount. I say we're going to do a 3,000 subscriber thing. So I'll give y'all $300 off the course as well. So I'll put that code in the comments below. It'll probably last a week and some change. So if you're watching this a month later, I'm sorry. You should have subscribed earlier. You should have turned on those notifications. You would have got the discount code. I just be saying, right? But anyway, do check that out if you are willing and able. Do check out these 4 areas of the stock market, see what works for you and your portfolio. And if you want another video that digs deeper into these areas, feel free to let me know. Say, hey, look, one more in defensive, one more in healthcare, so on and so forth. All right, that's it for me. I'll talk to you guys later. Bye.